Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within company filings. And let me tell you, this CSLM acquisition CORP report is about to get a whole lot more interesting because it seems they've been busy behind the scenes. So CSLM is getting ready to merge with Fusemachines, and this report is basically giving us the play-by-play of how that's all going down, including a crucial shareholder vote. It looks like they had a meeting on July 28th of last year to get the go-ahead for this big business combination. This filing is dated August 1st, 2025, but the really important stuff happened on July 28th, 2025, which was the date of their big shareholder meeting to approve this merger into scenes. CSLM Acquisition Corp, or CSLM as they're known, is a company that was formed to, well, acquire another company, and in this case they've set their sights on Fusemachines, an interesting company in the tech space. Now, before we dive into the meeting itself, let's quickly look at what kind of shares CSLM has out there. They've got these units, each made up of a Class A ordinary share, a right and half a warrant. They also have Class A ordinary shares and warrants that allow you to buy those shares. And then there are these rights which are a bit like options, giving you the chance to acquire a small piece of a Class A share. It's a bit of a mixed bag of securities they've got issued, which is common for these types of acquisition companies. And here's a heads up, CSLM identifies as an emerging growth company. What that means is they get to follow some lighter regulations, which can kind of speed things up for them. Think of it as a fast pass in the corporate world, and they've chosen not to use the extended transition period for new accounting standards. This means they're jumping right into the latest financial reporting rules, which is generally a good sign of being forward thinking. Alright, let's get to the heart of this filing, the shareholder meeting and the votes. This is where the shareholders officially rubber stamp the entire deal. So CSLM had this merger agreement in place since January of last year with Fusemachines. The plan was for CSLM to get a new Delaware address through something called a domestication, basically moving its legal home from the Cayman Islands to Delaware, which is a common move for companies looking for a more business-friendly environment in the US. There were a few amendments to this agreement along the way. Back in August of last year, they tweaked the amount of money they could borrow from their sponsor, increasing it from $2 million to $2.75 million. Then in February 2025, they made some more changes, including adjusting the PIPE investment amount, which is basically money coming in from private investors. And in relation to those February changes, an affiliate of CSLM's sponsor actually provided financing directly to Fusemachines. They gave them $2.16 million through a convertible note that will convert into Fusemachines stock at a price of 44 cents per share. This note was put into an escrow account ready to be released once the business combination is finalized. They also extended the maturity dates on 2 previous loans made to Fusemachines by the same sponsor affiliate. It shows the sponsor is really committed to making this deal happen. Now back to that crucial meeting on July 28th. The company reported that on the record date for this meeting, June 9th, there were over 6.1 million shares eligible to vote. Out of these, almost 5.2 million, or about 85%, were represented. This is a pretty good turnout, suggesting shareholders were engaged with the proposals. The very first item on the agenda was the business combination proposal. This is the big one, asking shareholders to approve the overall merger agreement and all the related transactions. And the results are resounding yes. They got over 5 million votes for the business combination. There were a little over 184,000 votes against it, and 0 abstentions, which is interesting. Also 0 broker non-votes, meaning brokers submitted votes on behalf of their clients for every share they held. This shows pretty strong support for the deal. Next up was the domestication merger proposal. This is about approving the move to become a Delaware corporation, changing the company's name to Fusemachines Inc. after the merger, and ensuring all existing CSLM shares convert into the new company's shares. Again, a massively positive vote. Just slightly fewer for votes than the first proposal at over 5 million. Then a similar number against, around 18,400 again. Then came the stock issuance proposal. This is a bit technical, but it's about approving the issuance of new shares of the combined company to Fusemachines shareholders and other investors, making sure they're complying with NASDAQ listing rules. And you guessed it, another overwhelming yes vote with over 5 million for. Following that was the organizational documents proposal. This is where shareholders vote on adopting the new corporate charter and bylaws for the combined company. These documents lay out the rules for how the new Fusemachines Inc. will operate. But again, a very strong showing of support with over 5 million for votes. Now things get a little more detailed. Proposal 5 is actually split into several parts, each asking shareholders to approve specific changes to the company's structure and governance, essentially updating the company's rulebook. First, Proposal 5A deals with the authorized shares. This is about changing the number of shares the company can legally issue. They're moving from a structure with Class A ordinary shares, Class B ordinary shares, and preference shares to a simpler structure with just common stock and preferred stock. This also passed with over 5 million for votes. Proposal 5B is about an exclusive forum provision. This is a common clause that dictates where lawsuits involving the company and its shareholders must be filed, usually specifying Delaware for state-level issues and federal courts for securities matters. This helps streamline legal proceedings, and it also received over 5 million for votes. Proposal 5C addresses the required vote to amend charter. This sets a higher bar for making significant changes to the company's charter in the future, requiring a supermajority vote, usually 2/3 of the shareholders. This is a governance measure to protect against quick, potentially harmful changes. This proposal also sailed through with over 5 million for votes. Proposal 5D is about the removal of directors. Similar to the charter amendments, this requires a supermajority vote, 2/3 to remove a director, providing stability in leadership. Again, over 5 million for votes. Proposal 5E is about stockholder action by written consent. This rule basically says that shareholders can only make big decisions at official meetings, not by sending in written consents outside of those meetings. This ensures more transparency and broader shareholder input. And this one also got the nod with over 5 million for votes. Finally, Proposal 5F covers additional changes. This is to make the company's corporate existence perpetual and remove those old references to being a blank check company since they're about to become a fully operational business. And this also passed with over 5 million for votes. It's pretty clear the shareholders are on board. Lastly, there was the Equity Incentive Plan proposal. This is a crucial one for attracting and retaining talent. It's an approval of a plan that allows the company to grant stock options and other equity awards to employees and executives. And this plan also received overwhelming support with over 5 million for votes. There's also a note about shareholder redemptions in item 8, all one. It states that some Class A shares were tendered for redemption, meaning shareholders asked to get their initial investment back instead of participating in the merger. The exact numbers are marked with asterisks, which usually means they're being withheld or not publicly disclosed in this document. The amount being removed from the trust account to cover these redemptions is also obscured. This is a common occurrence in these deals where shareholders might get cold feet or find better opportunities elsewhere. And finally, under Regulation FD Disclosure, CSLM mentioned in item 701 that they expect to close the business combination with Fusemachines in the coming days. This signals that the deal is very close to completion after this shareholder approval. Now, looking at the whole picture here, CSLM shareholders have given a massive thumbs up to merging with Fusemachines. All the proposals from the core business combination to the nitty-gritty governance changes and the equity incentive plan passed with flying colours. This basically clears the path for CSLM to become Fusemachines a single operating entity. The strong voting results really indicate confidence in Fusemachines' business prospects and the agreed upon merger terms. One thing that stands out is the near unanimous support across all proposals. While there were some votes against, the overwhelming majority shows a clear mandate from the shareholders. The fact that they are moving forward so quickly after this vote also suggests that the parties involved are eager to complete the transaction. The redemptions noted, though not quantified, are a standard part of these deals and don't appear to be exceptionally high based on the voting numbers presented. The move to Delaware is a strategic one, aiming for a more favourable regulatory and business environment. And the approval of the equity incentive plan is vital for attracting the talent Fusemachines will need to grow and innovate. In my opinion, this filing tells a story of a well-prepared and executed shareholder approval process. The company managed to get nearly all its shareholders on board for a significant transformation. The key for Fusemachines now will be to deliver on the promises implied by this strong shareholder backing. They need to demonstrate solid growth, effective management, and a clear path to profitability to justify the trust placed in them by their investors. The risks, as always for any evolving tech company, will be in-market competition, technological disruption, and the ability to scale their operations efficiently. But for now, the path forward seems clear and supported, Alright, that's our breakdown of CSLM Acquisition Corp's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.